All right. Today's SPY was down 1.47% as we are extremely oversold yet again, way below this lower Bollinger Band, and we did break that support at 427 after we broke down below 430. So remember, below 430, there's a very good chance we're coming to close this gap at 423 and then hit this next critical support at 420. Because we're breaking down below 430. So what that means is even if we get a bounce back towards 430 or even higher towards 436, we are still looking at an increased probability this is a downtrend on its way down to 420. So just because we're in a downtrend doesn't mean we go down in a straight line. There's always going to be lower highs. So as we start to bounce from this oversold condition, there is a good chance it is going to be a lower high. Even if we go all the way up to 438 and close that gap, we are still very likely going to continue down towards 420. Now, there is something very obvious on this chart, and I did forget to address it last night, and it was this very large head and shoulders pattern that is developing on SPY. And if you draw this neckline at an angle here, it does look like we are breaking down from a head and shoulders, which if you don't know, a head and shoulders says you would go the entire leg of the head below the shoulder, which is the neckline, and then you would start to break down and go the same measured move, and that would take us down towards that gap fill at 407. Now, one thing I would caution you against is these patterns fail very often, and while they are a pattern that you should be aware of, if you're going to short because of this head and shoulders, you need to know when it's wrong and when it's no longer playing out. And that is when we start to break out of this downtrend, which we have no idea when and if we're going to break out of this downtrend, but it is something you will need to manage your risk from. So I still think SPY in the general direction is trending lower below 442, and even more so now that we're below 430. Just keep in mind this is a very oversold condition, which means we could get a bounce to a lower high before we continue any lower. So there's nothing special about where I'm drawing these lines. Just keep in mind this is the general direction of the trend until we break out of the downtrend because we're expecting lower highs and lower lows. So in the very near term, watch that level at 430 because that is obviously a very critical level that we're now trading below. And if we break above 430, then there's the chance we go up towards 436 or the gap close at 438. I personally think we're a little too oversold to go straight to 423, but in the event we did go straight to 423, then I would expect to see that oversold bounce back towards 430, and then we'll see what happens when we get there. So in the very short term, expect an oversold bounce, but in the longer term, we still have to address the fact that we have this head and shoulders breakdown and a downtrend while we're trading below SPY 430 and 436. On the NASDAQ 100 triple Qs, we were down 1.5% today, and the triple Qs did break that previous low just below 355, so we officially have the lower low breakdown, especially on closing prices, so the triple Qs are now joining SPY with the lower low breakdown. So this is clearly a downtrend of lower highs and lower lows, and below 355, I told you we would very likely go to 347. So just like SPY, even if we get a dead cat bounce back to close the gap, there's still a very good chance to finish out this correction. We will go towards 347, and if we break 347, there is that gap to fill down there at 333, and the other support right around 337. So all of these are still very viable downtrends while we have the lower highs and lower lows. And in order to get more bullish on the triple Qs, we need to break back above that level at 370 and break out of this downtrend. So don't just hear downtrend and assume we go down a straight line. We are also very oversold in the triple Qs. So just like SPY, it's possible we bounce and even fill the gap to the upside before we go hit that lower price target. On the Dow Jones, we were down 1.16% today, and we're sitting right on top of this very critical support at 336, which was where we were expecting to go on the breakdown below 341. And now we only have that gap to fill up there at 344.2 and the gap way down here at 322.46. So as I continue to tell you, these are downtrends, which means the Dow Jones, even if it bounces, it could easily find a lower high from 341 and then still continue to trend lower. So just respect the fact that these are all downtrends until we break out of them. And the easiest way to know the downtrend is over with is by waiting for a reversal of higher highs and higher lows. And then once we break out of the downtrend, that means we could be reversing and we could be ending this correction. On the Russell 2000 IWM ETF, we were down 1.75% today, and we're sitting right on top of this support zone at 174. And if we don't bounce from here, we have another gap to fill at 171.56 and the bottom of the range around 170. So as I continue to say, these are downtrends, and if we bounce in the small caps, there's still the chance we fill the gap to the upside and then go fill the gap to the downside. And then in the small caps, as we approach the bottom of the range at 170, we need to seriously consider the fact that this correction could be ending and the small caps could be ready to break the downtrend, but we'll cross that bridge when the time comes. On the ARKK ETF, we were down 0.95%, and we still have the gap up there at 40.78 and the gap down here just below 36. And while we're in this downtrend, we are expecting to see the gap close at 36, which means lower highs and lower lows until we fill the gap. And the only way we're getting bullish is if we break back above 44.5. So it's lower highs and lower lows until we see that happening. On the VIX, we were up 12.08% today as the VIX did spike and close out above 18. And I told you this would be a trend reversal if we saw it, because the VIX had been typically crushing from 18 and now we're closing above it. So we're clearly back into that panic selling zone of the VIX above 18, which is exactly what we would expect to see if we're going to hit those lower price targets that I just gave you on the indices of SPY 420 and the triple Qs of 347 or lower. So this does match what we're seeing on the chart because we are getting the downtrend breakdowns below critical support, which means we're going for that next leg lower. And if at any point the VIX crushes, that's going to start triggering our dead cat bounce towards resistance. On Bitcoin, we're currently down about 0.5%, and Bitcoin is breaking down below all of the moving averages yet again. So it does look like we could be heading back down towards critical support at 25,000. And if we break below that, we're looking for a flush down to 22,000. In order to get bullish, we need to break these highs at 27 and 28,000. So if you want to wait to get bullish, simply wait until we break resistance. On Tesla stock, we were down 1.16% today, and Tesla is still hanging around this critical support at 244, but we do have price action below all of the moving averages. So this is starting to look a lot more bearish, especially if we break 244, and if we break 244, there's a good chance we're going to 230 or that gap fill below 218. So watch for critical resistance either at the breakdown here at 248 or this resistance zone at 255 to 258. And if we can't break that resistance and close the gap at 262, there's a good chance we're going to 230 and the gap fill below. On Apple stock, we were down 2.34% today, and Apple broke down below the critical support at 174, which now means this looks like a head and shoulders breakdown below the neckline, and there's a very good chance below 174 that we're coming down here to fill this gap at 167. In order to get more bullish, we need to at least break this high at 176 to 177, and if we do break that high, there is going to be the chance we go fill the gap above, but below 174, it's the bearish scenario that we're going down towards 167. So jumping back over to the S&P 500, these are bearish breakdowns in the indices, and that means we're expecting lower highs and lower lows, and the only way we're breaking out of these downtrends is when the price action proves it by making higher highs and higher lows. So respect the downtrend and manage your risk accordingly, and if you're going to short, be aware we're very oversold, and you're much better off shorting near resistance because that's where your risk is well defined. So whether you're longing at support or shorting at resistance, all that matters is that you're managing your risk and that you have a plan, and we are currently in the bearish scenario probabilities now that we're breaking critical support zones with confirmed downtrends. So make sure your plan is realistic and don't be expecting giant moves to the upside while we're in a downtrend. So it's a downtrend until it's not, and we may not be in this downtrend for long if it's simply just a correction, but let the price action tell us we're out of it, and then we'll have a smooth transition out of the downtrend and we can plan accordingly. If you want to crush this market, consider joining the Stocks Channel Discord or BANC Trade Alerts. And now is a great time to join BANC Trade Alerts because you can still take advantage of the BANC Labor Day sale. I'll put all of those details in the description below, and that sale will be ending at the end of September, so take advantage of it while you can. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.